Millionaire laughs at the new receptionist's resume until she closes a $1 million deal on the spot. Subscribe to the channel and tell us where you're watching from. The November rain drummed against the floor-to-ceiling windows of Sterling and Associates, casting shifting shadows across the marble lobby of the 42nd floor. Maya Chen adjusted her navy blazer one final time, her fingers trembling slightly as she approached the reception desk that would be her new workplace. The irony wasn't lost on her. 6 months ago, she'd been analyzing million-dollar portfolios from a corner office 20 floors above this very building at Goldman Sachs. "You must be the new receptionist," said Jennifer Walsh, the HR director, appearing with a clipboard and a smile that seemed professionally maintained rather than genuine. "Maya Chen, right? Welcome to Sterling and Associates." Maya nodded, forcing herself to maintain eye contact. "Thank you. I'm excited to be here." The words felt strange in her mouth. Excited wasn't exactly the word she'd used to describe taking a receptionist position with her MBA from Wharton and 5 years of Wall Street experience, but pride was a luxury she could no longer afford. Jennifer led her through the pristine lobby, past abstract paintings that probably cost more than Maya's annual salary, toward the gleaming reception desk positioned strategically to overlook both elevator banks. The position is straightforward. Manage incoming calls, greet clients, handle appointment scheduling. Basic reception duties. She paused, glancing at Maya with curiosity. "I have to say, your resume is quite extensive for this role." "I'm looking for a fresh start," Maya replied, which was partially true. What she didn't mention was the stack of rejection letters in her studio apartment, the dwindling savings account, or the fact that her former colleagues now avoided her calls. The elevator chimed, and Maya looked up to see a man in his early 40s step out, his charcoal suit impeccably tailored, his salt and pepper hair styled with precision. Even without introduction, she recognized Richard Sterling from the company website and countless business magazine covers. His presence commanded the space, and conversations seemed to quiet as he walked past. "Mr. Sterling," Jennifer called out, "I'd like you to meet Maya Chen, our new receptionist." Richard paused, his steel-gray eyes scanning Maya with the same intensity she imagined he used to evaluate potential investments. He extended his hand, and she noticed the Patek Philippe watch on his wrist, worth more than most people's cars. "Ms. Chen," he said, his voice carrying the confidence of someone accustomed to being the smartest person in the room. "Jennifer mentioned you were starting today." "Yes, sir. I'm looking forward to contributing to the team," Maya responded, matching his firm handshake. Richard's assistant, a sharp-eyed woman in her 30s, appeared at his elbow with a tablet. "Mr. Sterling, the Morgan meeting has been moved to 10:30, and the Singapore call is confirmed for 3. "Thank you, Sarah." He turned back to Maya, and she caught something calculating in his expression. "Ms. Chen, I took the liberty of reviewing your file. Quite an impressive background for someone seeking a reception position. Wharton MBA, Goldman Sachs, quantitative analysis specialization." His tone carried a hint of amusement that made Maya's cheeks flush. "I believe every position offers opportunities to learn and grow," she replied evenly, though inside she felt the familiar sting of judgment. Richard chuckled, the sound carrying across the marble floor. "How refreshingly optimistic. Well, I'm sure you'll find answering phones and scheduling appointments quite different from your previous endeavors." He glanced at his watch. "I have a board meeting. Jennifer, make sure Ms. Chen gets properly oriented." As he walked away, Maya heard him speaking quietly to Sarah, though his words carried back clearly. "Another overqualified casualty looking for any port in a storm. Give her 2 weeks before she realizes this isn't Goldman Sachs." Maya's hands clenched at her sides, but she forced her expression to remain neutral. She'd heard worse in the past 6 months, and she'd learned that dignity was often the only thing left when everything else had been stripped away. Jennifer, seemingly oblivious to the exchange, continued the orientation. "Don't mind Mr. Sterling, he's brilliant, but he can be direct. The phone system is fairly intuitive, and here's the client database. Most of our appointments are scheduled through the online portal, but some clients prefer calling directly." As Jennifer explained the various systems, Maya found herself analyzing the flow of people through the lobby, noting the types of clients, the rhythm of meetings, the subtle hierarchies evident in how staff interacted. Old habits died hard, and her analytical mind couldn't help but catalog information even as she learned to operate the phone system. "Any questions?" Jennifer asked. Just one, Maya said, settling into the leather chair behind the reception desk. What's the most important thing I should know about working here? Jennifer glanced toward the elevator where Richard had disappeared, then leaned closer. Results matter more than anything else. Mr. Sterling built this company from nothing, and he expects excellence from everyone. Don't take his comments personally. He tests everyone. As Jennifer left her alone at the desk, Maya looked out at the bustling Manhattan street below, rain still streaking the windows. She thought about her father's words when she'd called to tell him about the job. Sometimes we take one step back to take 2 steps forward, little dragon. She hoped he was right. Maya's first morning at Sterling & Associates passed in a blur of phone calls, package deliveries, and client check-ins. The rhythm was different from her previous work, less cerebral, more interpersonal, but she found herself oddly comfortable with the variety. Each client who walked through the door carried their own story, their own financial dreams and anxieties, and Maya discovered she enjoyed being the first point of contact in their journey. Around 11:30, she was reviewing the afternoon appointment schedule when the elevator opened to reveal a woman in her 50s, impeccably dressed in a cream-colored suit, carrying herself with the confidence that came from generational wealth. Maya recognized the type immediately from her Goldman days. Old money, East Coast establishment, the kind of client who could make or break quarterly numbers. "Good morning," the woman said, approaching the desk with measured steps. "I'm Victoria Ashford. I don't have an appointment, but I was hoping to speak with someone about portfolio management services." Maya's pulse quickened slightly. Ashford, she knew that name. Ashford Industries, a family-owned conglomerate with holdings in shipping, real estate, and technology. Conservative estimates put their wealth in the hundreds of millions. "Of course, Ms. Ashford. Let me check on availability." Maya pulled up the calendar system, her heart sinking as she saw what she already knew. All senior partners were in meetings or off-site until after 2 o'clock. "I'm afraid our senior partners are currently unavailable, but I'd be happy to schedule an appointment for later this afternoon or tomorrow morning." Victoria's expression shifted slightly, a polite but firm disappointment crossing her features. "I'm flying to London this evening, and this was my only window. Perhaps another firm would be better suited to accommodate my timeline." Maya felt the weight of the moment. She could practically hear Richard Sterling's mocking words from earlier, answering phones and scheduling appointments. But Victoria Ashford wasn't just any client. She represented exactly the type of high-net-worth individual that Sterling & Associates built their reputation on serving. "Ms. Ashford," Maya said, making a decision that would either end her career at Sterling & Associates before it began, or change everything. "While I can't offer you a formal presentation today, I'd be happy to discuss your portfolio needs and ensure that when you do meet with our team, we're fully prepared to address your specific requirements." Victoria raised an eyebrow, intrigued. "You're the receptionist?" "Yes, but I'm also someone who understands portfolio management," Maya replied, her confidence growing. "May I ask what's prompting you to consider a change in wealth management services?" For a moment, Victoria studied Maya with the same intensity Richard had used earlier, but where his gaze had been dismissive, hers was appraising. "My current firm has become complacent. They're managing my family's portfolio like it's 1985. Heavy on bonds, minimal tech exposure, almost no ESG considerations. I need someone who understands that preservation of wealth and growth aren't mutually exclusive." Maya nodded, her mind already processing the information. Traditional wealth management often prioritizes capital preservation over optimization, especially for established families. But you're right. In today's market, that approach can actually increase risk through missed opportunities. "Exactly." Victoria moved closer to the desk, her interest clearly piqued. "My current advisor keeps telling me that technology stocks are too volatile for someone of my profile." She made air quotes, her frustration evident. "What's your current allocation looking like?" Maya asked, then quickly added, "Generally speaking, of course." Victoria glanced around the empty lobby, then sat down in one of the leather chairs positioned near Maya's desk. 60% bonds, 30% traditional equities, mostly blue-chip dividend stocks, and 10% alternatives, though most of that is real estate. Maya tried to keep her expression neutral, but she could see immediately why Victoria was frustrated. "That's certainly a conservative approach. What kind of returns are you seeing?" 4 to 6% annually, and that's in a bull market." Victoria shook her head. My 25-year-old nephew is beating that with index funds. He probably is, Maya agreed, earning a surprised laugh from Victoria. The challenge isn't finding better returns, it's finding them with appropriate risk management for your specific situation. Tell me, what does your family's liquidity needs look like over the next 5 to 10 years? As Victoria began explaining her family's financial situation, upcoming estate transfers, philanthropic goals, business expansion plans, Maya found herself falling into the familiar rhythm of financial analysis. She asked probing questions about tax implications, discussed the merits of different ESG screening approaches, and outlined how demographic shifts were creating opportunities in sectors Victoria's current advisor was ignoring. 20 minutes into their conversation, Victoria leaned back in her chair with a smile. I have to ask, what exactly is your background, Ms. Chen? Maya Chen, and I have an MBA from Wharton with a focus on quantitative analysis. I spent 5 years at Goldman Sachs before joining Sterling and Associates. As a receptionist? Victoria's tone wasn't mocking, it was curious. Maya felt her cheeks warm slightly. Career transitions aren't always linear. Victoria nodded thoughtfully. No, they're not, but talent usually finds a way to surface. She paused, seeming to make a decision. Maya, what would you recommend for someone in my situation? Not Sterling and Associates' recommendation, yours. Maya took a breath, knowing she was about to cross a line that could cost her the job, but unable to resist the intellectual challenge. Based on what you've told me, I'd suggest a more dynamic allocation, maybe 40% equities, with a focus on companies that benefit from demographic trends, healthcare innovation, sustainable technology, emerging market infrastructure, 20% in fixed income but shorter duration and higher quality than traditional bonds, 20% in alternatives, rates, private equity, maybe some commodity exposure as an inflation hedge, and 20% in growth opportunities, clean tech, biotech, companies positioned to benefit from regulatory changes. Victoria pulled out her phone and began taking notes. Risk level? Higher than your current portfolio, but more diversified. The key is correlation. You want assets that don't all move in the same direction. Your current portfolio is essentially one bet, that the economy will continue exactly as it has for the past 30 years. And if it doesn't, then you're in trouble regardless. But at least with a diversified approach, you have multiple paths to positive returns. Victoria finished her notes and looked up at Maya with genuine respect. That's the most sensible financial advice I've heard in years. What kind of fees would Sterling charge for this level of service? Maya hesitated. She wasn't authorized to discuss fee structures, and she was already far outside her job description. But Victoria was waiting, and walking away now felt like abandoning a half-finished equation. For a portfolio of your size, our standard management fee would be 1% annually, with performance bonuses tied to beating relevant benchmarks. But honestly, Ms. Ashford, the fee structure matters less than finding advisors who understand your goals and have the expertise to execute on them. Victoria stood up, extending her hand to Maya. Ms. Chen, I'm impressed. More than impressed, actually. I'd like to move forward with Sterling and Associates, but I have one condition. Maya shook her hand, confused. What's that? I want you involved in managing my account. Before Maya could respond, the elevator chimed, and Richard Sterling stepped out, his expression shifting from professional composure to surprise as he took in the scene. His receptionist in deep conversation with one of Manhattan's wealthiest women. Ms. Ashford, he said, quickly recovering and approaching with his hand extended. What a pleasant surprise. I wasn't aware you were considering our services. Victoria shook his hand politely, but didn't release Maya from her gaze. Mr. Sterling, your receptionist has just provided me with the most insightful financial consultation I've received in years. I'd like to transfer my family's portfolio to Sterling and Associates, approximately $43 million, with Ms. Chen as my primary point of contact. The silence that followed seemed to stretch across the marble lobby like a held breath. Maya watched Richard's face cycle through surprise, confusion, and what might have been the beginning of respect. See? He said finally, his voice carefully controlled. Well, that's wonderful news, Ms. Ashford. Perhaps we should discuss the details in my office. Of course, Victoria agreed, but I meant what I said about Ms. Chen's involvement. She understands my needs better than any advisor I've worked with. As they walked toward Richard's office, Maya caught his glance back at her, no longer dismissive but calculating, as if he were seeing her for the first time. She sat back down at her desk, her hands trembling slightly as she realized what had just happened. In 30 minutes, she'd gone from answering phones to potentially managing one of the largest portfolios in the firm's history. Her father's words echoed in her mind. Sometimes one step back to take 2 steps forward. She was about to find out if he was right. Maya tried to focus on the steady stream of phone calls and client check-ins, but her attention kept drifting to the closed door of Richard Sterling's corner office. Through the frosted glass, she could see the silhouettes of Richard and Victoria Ashford in what appeared to be an animated discussion. Occasionally, she caught Victoria gesturing toward the reception area, and each time, Maya felt a mixture of anticipation and dread. "Quite the morning you've had," said a voice behind her. Maya turned to find Sarah Martinez, Richard's executive assistant, approaching with 2 cups of coffee. Sarah had been with Sterling & Associates for 8 years, and Maya had quickly learned that nothing happened in the office without Sarah knowing about it. "Thank you," Maya said, accepting the coffee gratefully. "I'm not sure if I should be excited or terrified." Sarah glanced toward Richard's office, then lowered her voice. "In the 5 years since I've been Mr. Sterling's assistant, I've never seen him look quite so unsettled. Victoria Ashford is known for being direct, but she's also one of the most respected investors on the East Coast. If she's asking for you specifically—" Sarah paused, studying Maya's face. "What exactly did you 2 discuss?" Maya chose her words carefully. She was frustrated with her current wealth management approach. "We talked about portfolio diversification, market trends, risk management strategies. Basic financial planning principles." "Basic?" Sarah raised an eyebrow. "Maya, Victoria Ashford's portfolio is managed by Blackstone. Those aren't basic conversations." Before Maya could respond, Richard's office door opened, and Victoria emerged, followed by Richard. Even from across the lobby, Maya could see that Victoria looked satisfied, while Richard appeared to be processing something significant. "Ms. Chen," Victoria called out, walking directly to the reception desk. "Mr. Sterling and I have had a very productive conversation. I'll be transferring my accounts to Sterling & Associates effective immediately." She paused, her smile warm but her eyes sharp. "And, as I mentioned, I've specifically requested that you be involved in the management of my portfolio." Maya felt every eye in the lobby turn toward her. The morning rush had brought in several clients and staff members, and conversations had quieted as people tried to understand what was happening. "I'm honored by your confidence, Ms. Ashford," Maya said, "but I should clarify that I'm currently in a reception role here at Sterling & Associates." "Roles can change," Victoria replied smoothly. "Talent, however, is fixed. You either have it or you don't." She turned to Richard, who had joined them at the desk. "Mr. Sterling, I'll expect the account transfer paperwork by tomorrow morning. My assistant will coordinate the details with yours." Richard nodded, his professional composure intact, despite what Maya suspected was significant internal turbulence. "Of course, Ms. Ashford. We're delighted to welcome you to our client family." After Victoria left, the lobby seemed to exhale collectively. Richard stood at Maya's desk for a moment, his expression unreadable. Finally he spoke, his voice quiet enough that only she could hear. "My office. 5 minutes." Maya watched him walk away, then looked around the lobby at the curious faces of her new colleagues. Some looked impressed, others skeptical, and a few seemed to be calculating what this might mean for their own positions. She'd been at Sterling & Associates for exactly 4 hours, and she'd already disrupted the established order. When she knocked on Richard's office door 5 minutes later, she found him standing at the floor-to-ceiling windows, looking out at the Manhattan skyline. His office was exactly what she'd expected. Expensive furniture, awards and recognitions covering one wall, and a view that probably cost more in rent than most people made in a year. "Close the door," he said without turning around. Maya did as instructed, then stood near his desk waiting. The silence stretched between them, punctuated only by the muffled sounds of traffic 42 floors below. $43 million, Richard said finally, turning to face her. "Victoria Ashford just committed $43 million to this firm based on a 20-minute conversation with my receptionist." He paused, studying her face. "Help me understand what just happened." Maya took a breath, knowing that her next words would determine her future at Sterling & Associates. Ms. Ashford was frustrated with her current advisor's conservative approach. She wanted to discuss more dynamic portfolio strategies that aligned with her risk tolerance and long-term goals. And you felt qualified to have that discussion. I felt qualified to listen to her concerns and ask relevant questions, Maya replied carefully. The principles of portfolio management don't change based on job titles. Richard moved to his desk and picked up a file. Maya's employment file, she realized. Wharton MBA, summa cum laude. 5 years at Goldman Sachs, specializing in high net worth portfolio management, consistently high performance reviews. He looked up at her. What happened? Maya had rehearsed this answer during countless job interviews over the past 6 months, but it never got easier. Goldman went through a restructuring. They eliminated several positions in my division. And the other firms? This was the harder part. The financial industry is tight-knit. When positions are eliminated, especially at senior levels, it often reflects on the individual as much as the circumstances. Richard nodded slowly. You were blacklisted. Informally, Maya admitted. My former supervisor had some personal and professional conflicts with my recommendations on a few major accounts. When the restructuring happened, I became convenient collateral damage. What kind of conflicts? Maya hesitated, then decided on honesty. I recommended that we divest from several energy sector holdings and increase ESG allocations. He felt that was too politically motivated for our client base. When those energy stocks underperformed and our competitors' ESG portfolios outpaced ours, the tension escalated. You were right about the market trends. Yes, but being right didn't protect my position when cuts needed to be made. Richard sat down behind his desk, his fingers steepled as he processed this information. Victoria Ashford is not just any client, Maya. She's connected to boards, foundations, investment committees across the Northeast. If we manage her portfolio successfully, it could open doors to 50 million in new business within a year. I understand the stakes, Maya replied. Do you? Richard leaned forward. Because if we don't meet her expectations, it won't just be your career that suffers. Her influence could damage Sterling and Associates' reputation with an entire network of potential clients. Maya felt the weight of his words, but also a familiar thrill, the intellectual challenge of high-stakes portfolio management, the opportunity to prove herself again. What are you proposing? Richard was quiet for a long moment, and Maya could almost see him calculating risks and opportunities. Finally, he spoke. I'm proposing we find out if your confidence is justified. You'll transition from reception to a junior advisor role with Victoria Ashford as your primary client. You'll work under the supervision of Marcus Webb, our senior partner, but you'll have day-to-day responsibility for her account. Maya's heart raced. It was more than she'd dared hope for when she'd walked in that morning. And if I succeed? If you succeed, we'll discuss a permanent position as a senior advisor. He paused, his expression serious. And if you fail, you'll find that your reputation challenges extend beyond Goldman Sachs. It was a risk, a significant one, but it was also an opportunity to rebuild her career and prove that her expertise was worth more than office politics and personal vendettas. I accept, Maya said. Richard nodded, then pressed a button on his phone. Sarah, could you ask Marcus to join us and arrange for someone to cover reception for the rest of the day? As they waited for Marcus, Richard continued studying Maya's file. Your portfolio recommendations to Victoria, were they off the cuff or do you have specific investment strategies in mind? I have very specific strategies in mind, Maya replied. I've been tracking market trends and demographic shifts for months. When you have time to think but no clients to advise, you end up doing a lot of theoretical portfolio construction. Show me. Maya spent the next 15 minutes outlining her investment thesis, explaining how she'd allocate Victoria's portfolio across different asset classes and geographic regions. She discussed the risks and mitigation strategies, the expected returns under various market scenarios, and the tax implications of different approaches. By the time Marcus Webb arrived, a distinguished man in his 60s with the bearing of someone who'd navigated multiple market cycles, Richard was taking notes. Marcus, Richard said, meet our newest junior advisor. Marcus Webb had the kind of presence that came from 30 years of managing money for people who could afford to lose millions, but chose not to. As he settled into the chair across from Richard's desk, his grey eyes assessed Maya with the careful attention of someone who'd seen countless promising careers either flourish or implode in the high-pressure world of wealth management. Richard filled me in on the basics, Marcus said, his voice carrying a slight Boston accent that spoke of old New England money. Victoria Ashford, 43 million, and our new colleague here managed to close the deal from the reception desk. He turned to Maya. Impressive, but closing is the easy part. Managing expectations and delivering returns, that's where careers are made or broken. Maya straightened in her chair. I understand the responsibility, Mr. Webb. Marcus, please. We are going to be working closely together. He pulled out a tablet and began scrolling through what appeared to be market data. Victoria's current portfolio is indeed as conservative as you described. I've been tracking her advisor's performance for years. They're competent but predictable. She's been leaving money on the table. How much money? Richard asked. Marcus did a quick calculation on his tablet. Over the past 5 years, with better asset allocation and more strategic rebalancing, she could have seen returns that were 2 to 3 percentage points higher annually. On a $43 million portfolio, that's significant money. Maya leaned forward. What's been holding her back? Her advisor's firm has a very traditional approach to wealth preservation. They treat every client over 50 like they're planning for immediate retirement, regardless of their actual financial goals or risk tolerance. Marcus set down his tablet. Victoria Ashford is 54 years old, in excellent health, with no immediate liquidity needs and a family foundation that won't need major distributions for another decade. She's been managed like an 80-year-old widow. Richard nodded. What's our approach? First, we need to understand her complete financial picture, Maya said. Not just the portfolio we're managing, but her other holdings, real estate, business interests, philanthropic commitments. We need to see how this 43 million fits into her overall wealth strategy. Marcus smiled, the first genuine warmth Maya had seen from him. Good instinct. Most advisors focus only on the assets they control. But optimal portfolio management requires understanding the client's complete financial ecosystem. Second, Maya continued, gaining confidence, we need to establish clear benchmarks and communication protocols. She should know exactly how we're measuring success and receive regular updates that are detailed enough to be meaningful, but not so technical that they obscure the bigger picture. And third, Richard prompted. Maya paused, choosing her words carefully. We need to be prepared to have difficult conversations. If market conditions change, if our strategy isn't performing as expected, if her personal situation shifts, we need to be advisors she trusts to tell her the truth, not just what she wants to hear. Marcus and Richard exchanged glances, and Maya caught something that might have been approval in their expressions. All right, Richard said. Marcus, what do you need to get Maya up to speed? Complete access to our research systems, portfolio management software, and client communication platforms. I'll also want her to spend time with our compliance team. Victoria's portfolio size puts us into some complex regulatory territory. Done, what else? Marcus turned to Maya. I'll need to see your specific investment recommendations in writing. Not just broad asset allocation, but specific securities, rationales for each position, risk assessments and performance projections under various market scenarios. Maya felt a familiar flutter of excitement. When do you need it? Victoria wants to see our preliminary recommendations by Friday. That gives us 3 days to put together a comprehensive investment plan for one of the most sophisticated investors in the city. Marcus's expression was serious. No pressure. Richard stood up, signaling the end of the meeting. Maya, Sarah will get you set up with an office and system access. Marcus, I want daily updates on the portfolio development. We have one chance to make a first impression with Victoria Ashford, and it needs to be flawless. As they filed out of Richard's office, Maya felt the weight of what she'd committed to. 3 days to design an investment strategy for $43 million, working with a senior partner she'd just met, for a client whose influence could make or break her career. Maya, Marcus said as they walked toward the elevator, can I give you some advice? Please, don't try to be brilliant. Victoria Ashford has seen brilliant advisors before, and many of them lost her money trying to prove how smart they were. Be thorough, be honest, and be focused on her goals, rather than showcasing your expertise. They reached Maya's new office, a small but well-appointed space with a view of the East River. As she settled behind her desk, Maya pulled out her phone and scrolled to her father's contact. She hadn't called him with good news in months. Bah, she said when he answered, using the Mandarin word for father that she'd called him since childhood. Little dragon. How was your first day? Maya looked out at the Manhattan skyline, still hardly believing the morning's events. I think I might have just gotten the opportunity I've been waiting for. Tell me everything. As Maya recounted the day's events, she could hear the pride in her father's voice. When she finished, he was quiet for a moment. You know what this means? He said finally. That I have 3 days to prove I belong here? No, little dragon. It means that sometimes the best opportunities come disguised as the worst circumstances. You took this job because you needed work, but maybe the universe had other plans. After hanging up, Maya opened her laptop and began pulling up market data. She had $43 million to manage and 3 days to prove that Richard Sterling's gamble on her was worth taking. Outside her office window, the sun was setting over Manhattan, casting long shadows across the city, where dreams were made and fortunes were won and lost on the strength of good decisions and careful planning. Maya cracked her knuckles and got to work. Maya's alarm buzzed at 5:30 a.m., but she was already awake, staring at the ceiling of her studio apartment in Queens. She'd spent most of the night running portfolio scenarios in her head, calculating risk-adjusted returns, and considering how global market trends might affect Victoria Ashford's investment goals. The 3 empty coffee cups on her nightstand testified to how little sleep she'd actually gotten. By 6:45 a.m., she was on the subway heading into Manhattan, her laptop bag heavy with research materials and a portable printer she'd borrowed from her neighbor. The morning commuters pressed around her, but Maya barely noticed. Her mind was entirely focused on the presentation she needed to deliver in less than 48 hours. When she arrived at Sterling & Associates, she found Marcus Webb already at his desk, surrounded by financial reports and market analyses. His office was 3 times the size of hers, with awards and photographs covering the walls, evidence of 3 decades of successful wealth management. Early bird, he said, looking up as she knocked on his doorframe. Good. We have a lot of ground to cover today. Maya settled into the chair across from his desk, pulling out her laptop. I've drafted preliminary asset allocation models based on our conversation yesterday. I'd like to run them by you before we get too deep into specific security selection. Marcus nodded approvingly. Show me what you're thinking. Maya turned her laptop screen toward him, displaying a detailed pie chart and accompanying spreadsheet. I'm recommending a 45-25-20-10 allocation, 45% equities, 25% fixed income, 20% alternatives, and 10% cash and cash equivalents. That's significantly more aggressive than her current portfolio, Marcus observed. Walk me through your reasoning. Victoria's current advisor has her at 30% equities, 60% bonds, 10% alternatives. That allocation made sense in the 1990s, but given current interest rates and inflation trends, it's actually riskier than a more equity-heavy approach. Maya clicked to the next slide, showing historical performance data. Over the past 10 years, her current allocation would have underperformed a 60-40 stock-bond mix by an average of 1.8% annually. Marcus leaned forward, studying the data. And you're going even more aggressive than 60-40. Yes, but with better diversification. The equity portion isn't just US large-cap stocks. I'm recommending 20% domestic large-cap, 10% international developed markets, 10% emerging markets, and 5% small-cap value. Maya's confidence grew as she explained her strategy. The emerging markets allocation is key. Demographic trends suggest significant growth potential over the next decade. What about the alternatives? Maya clicked to another slide. REITs for inflation protection and income, private equity for growth, and a small allocation to commodities as a hedge against currency devaluation. Nothing exotic, but diversified enough to provide uncorrelated returns. Marcus was quiet for several minutes, working through calculations on his own tablet. Finally, he looked up. Your risk modeling? Conservative estimates suggest 8 to 10% annual returns, with a maximum drawdown of 15% during major market corrections. More optimistic scenarios could see 12-14% returns, but I'd rather under-promise and over-deliver. Smart approach. Marcus set down his tablet. There's just one problem. Maya's stomach tightened. What's that? Victoria Ashford didn't get to $43 million by accepting generic portfolio recommendations. She's going to want to see specific securities, specific rationales, and specific exit strategies. Marcus stood up and walked to his whiteboard. Let's start with your domestic equity allocation. Which stocks are you recommending and why? For the next 4 hours, Maya and Marcus went through every component of the proposed portfolio. Marcus challenged each recommendation, questioned every assumption, and pushed Maya to defend her choices with data rather than intuition. It was intense, exhausting, and exactly the kind of intellectual rigor that Maya had missed during her months of unemployment. Microsoft over Apple? Marcus asked as they reviewed the technology sector allocations. Microsoft has better enterprise cloud growth potential, more predictable revenue streams, and lower regulatory risk, Maya replied without hesitation. Apple is still heavily dependent on iPhone sales, which are vulnerable to market saturation and Chinese economic pressures. Counter-argument? Maya paused, then smiled. Apple's services revenue is growing faster than expected. They're developing new product categories that could drive the next growth cycle, and their cash position gives them more strategic flexibility than almost any other company in the world. So which one do you choose? Both, but weighted toward Microsoft for the next 2 years, with a rebalancing trigger if Apple's services revenue exceeds certain thresholds. Marcus nodded approvingly. Now you're thinking like a portfolio manager instead of a stock picker. By lunchtime, they'd worked through the entire equity allocation and were starting on fixed income. Maya's notebook was filled with modifications, additional research tasks, and backup scenarios for different market conditions. Let's break for lunch, Marcus said, checking his watch. But I want you to spend the afternoon running stress tests on the portfolio. What happens if interest rates rise faster than expected? What if there's a major correction in emerging markets? What if inflation stays elevated for longer than projected? Maya gathered her materials, feeling both exhausted and energized. Marcus, can I ask you something? Sure. Why are you helping me like this? I mean, I know Richard assigned me to work with you, but you're spending a lot of time making sure I succeed. Marcus was quiet for a moment, then sat back down in his chair. 28 years ago, I was a junior analyst at a mid-tier firm in Boston. I had good instincts and solid technical skills, but I was overconfident and underprepared for the complexity of managing real money for real people. Maya sat back down as well, sensing this was important. My first major client was a widow whose husband had left her a substantial portfolio. I thought I knew better than her previous advisor, made some aggressive moves that I was convinced would generate superior returns. Marcus shook his head. 6 months later, the market turned, and my superior strategy had lost her 12% of her wealth. What happened? She fired me, obviously, but more importantly, I learned that being smart isn't enough in this business. You have to be smart, careful, and humble enough to admit when you don't know something. Marcus looked at Maya directly. You have the technical skills and the intellectual honesty to succeed, but Victoria Ashford's portfolio will be the most complex challenge you've ever faced. I'm not helping you succeed. I'm helping you avoid the mistakes that could destroy both your career and her financial security. After lunch, Maya spent the afternoon running the stress tests Marcus had requested. She modeled scenarios where interest rates spiked, where emerging markets crashed, where inflation exceeded expectations, and where multiple asset classes declined simultaneously. For each scenario, she calculated how the proposed portfolio would perform and what adjustments would be necessary to protect Victoria's wealth. By 7 p.m., the office had largely emptied, but Maya was still at her desk, refining her projections and preparing visual presentations of the data. She was so absorbed in her work that she didn't notice Richard Sterling until he knocked on her doorframe. "Burning the midnight oil?" he asked, though it was barely past 7. Maya looked up, realizing her eyes were strained from staring at spreadsheets all day. "Just want to make sure everything is perfect for Friday's presentation." Richard entered her office and sat down in the chair across from her desk, the same chair where Marcus had spent the morning challenging her assumptions. "How are you feeling about the recommendations?" "Confident but nervous," Maya replied honestly. "The portfolio should meet Victoria's objectives, but there are always variables you can't account for." "Such as?" Maya leaned back in her chair, grateful for the opportunity to voice some of her concerns. "Geopolitical risks, regulatory changes, technology disruptions that could affect entire sectors. We can model historical scenarios, but the future always brings surprises." Richard nodded. "That's why we build in safeguards and maintain flexibility. But Maya, there's something else I want you to consider." "What's that?" "Victoria Ashford's decision to work with us wasn't just about portfolio management. She was impressed by your authenticity, Your willingness to listen to her concerns and address them directly. Richard paused. Don't lose that in the pursuit of technical perfection. The best investment strategy in the world won't matter if she doesn't trust us to execute it. After Richard left, Maya sat alone in her office looking out at the lights of Manhattan. His words had resonated with something she'd been struggling with all day, the balance between demonstrating expertise and maintaining the genuine connection she'd made with Victoria during their first conversation. She picked up her phone and scrolled to Victoria's contact information, then hesitated. Was it appropriate to call her directly? Would it seem unprofessional or presumptuous? Finally, she decided that authenticity meant taking some risks. She dialed the number. Victoria Ashford. Ms. Ashford, this is Maya Chen from Sterling & Associates. I hope I'm not calling at a bad time. Not at all, Maya. I was just reviewing some documents for tomorrow's board meeting. How are the portfolio recommendations coming along? Maya took a breath. They're coming along well, but I wanted to ask you something directly. When we spoke on Tuesday, you mentioned that your current advisor treated you like your age and gender determined your risk tolerance. As we finalize our recommendations, are there any other assumptions about your investment preferences that you'd like to make sure we're not making? There was a pause, then Victoria laughed, a genuine, pleased sound. Maya, that's exactly the kind of question that convinced me to work with your firm. Most advisors assume they know what I want based on their experience with other clients. You're asking me to tell you directly, because ultimately, it's your money and your goals that matter. Exactly. And to answer your question, yes, there is something else. I'm not just investing for preservation and growth. I'm also investing to create positive change in the world. Environmental sustainability, social responsibility, good governance. These aren't just trendy concepts to me. They're integral to how I want my wealth to impact the future. Maya smiled, making notes. I was hoping you'd say that. ESG considerations are built into our recommendations, but I'd like to understand your priorities more specifically. They talked for another 20 minutes about Victoria's values, her philanthropic goals, and her vision for how her wealth could contribute to positive change. By the time Maya hung up, she had a much clearer picture of who she was serving and why this portfolio mattered beyond just financial returns. Friday morning arrived with unseasonable warmth for November, and Maya took it as a good omen as she walked into Sterling & Associates carrying a leather portfolio case that had been her father's gift when she'd graduated from Wharton. Inside were printed copies of her investment recommendations, visual presentations, and backup analyses for every question she could anticipate Victoria might ask. The conference room on the 43rd floor had been reserved for the 10 a.m. meeting, and Maya arrived early to set up her materials and test the presentation technology. The room's floor-to-ceiling windows offered a spectacular view of Central Park, and Maya found herself drawing strength from the sight of people jogging along the paths below, ordinary people pursuing their goals with determination, just as she was about to do. Marcus arrived at 9:45, followed shortly by Richard and Sarah, who would be taking notes for the client file. At exactly 10 a.m., Victoria Ashford stepped off the elevator, dressed in a charcoal grey suit that spoke of serious business intentions. "Good morning, everyone," Victoria said, taking her seat at the head of the conference table. "I'm looking forward to seeing what you've prepared." Maya stood up, feeling the familiar pre-presentation flutter of nerves mixed with excitement. "Ms. Ashford, thank you for giving us the opportunity to present our recommendations. Before I begin, I want to acknowledge that managing your portfolio is both a privilege and a responsibility that we take very seriously." Victoria nodded approvingly. "I appreciate that. Please proceed." Maya clicked to her first slide, displaying a comprehensive overview of Victoria's current portfolio alongside their proposed reallocation. "Based on our conversations and our analysis of your financial goals, we're recommending a strategic shift that maintains appropriate risk management while positioning your portfolio for enhanced growth and income generation." For the next 45 minutes, Maya walked through each component of the recommended portfolio. She explained the rationale behind the increased equity allocation, detailed the ESG screening criteria that would be applied to every investment, and outlined the performance monitoring and rebalancing protocols that would ensure the portfolio remained aligned with Victoria's objectives. Victoria asked sharp, informed questions throughout the presentation. She challenged the emerging markets allocation, questioned the specific bond duration strategy, and pressed Maya on how the portfolio would perform during various economic scenarios. "What about liquidity?" Victoria asked, as Maya discussed the alternatives allocation. "If I need to access significant capital quickly, how would that affect the overall portfolio structure?" Maya had anticipated this question. "We've structured the portfolio to maintain 15% in highly liquid assets at all times. Additionally, the equity positions are all in large-cap stocks with strong daily trading volumes, so conversion to cash can happen quickly without significantly impacting market prices." Time horizon. "We're designing this portfolio with a 10 to 15-year investment horizon, but with quarterly rebalancing opportunities and annual strategy reviews to ensure it continues to meet your evolving needs." Victoria made notes throughout the presentation, her expression giving little indication of her thoughts. When Maya finished, the room fell silent as Victoria reviewed her notes. "The ESG integration is well thought out," Victoria said finally. "I'm particularly impressed by your approach to screening technology companies for labor practices and data privacy policies. That level of detail suggests you understand that responsible investing requires more than just avoiding obvious problem sectors." Maya felt a flutter of relief. "Thank you. We believe that companies with strong ESG practices are also likely to be better long-term investments from a purely financial perspective." "I agree." Victoria turned to Marcus. "Marcus, you've been managing money longer than Maya has been alive. What's your assessment of these recommendations?" Marcus straightened in his chair. "Victoria, I've reviewed every component of this portfolio proposal, stress-tested it against multiple market scenarios, and challenged Maya on every assumption and calculation. From a technical standpoint, it's sound. More importantly, it reflects a deep understanding of your specific objectives rather than a generic high-net-worth template." Victoria nodded, then turned to Richard. "Mr. Sterling, what kind of support structure will Maya have as she manages this portfolio?" Richard leaned forward. "Maya will have full access to our research team, our trading desk, and our compliance department. Marcus will remain available for consultation, and I'll personally review performance reports monthly. However, day-to-day management decisions will be Maya's responsibility." "Good." Victoria closed her notebook and looked directly at Maya. "I have one final question, and I want a completely honest answer." Maya's pulse quickened. "Of course. Are you absolutely confident that this portfolio will meet my objectives?" Maya considered the question carefully. She could give the safe answer, hedge her response with caveats about market uncertainty and unforeseeable risks, or she could give the honest answer. "Ms. Ashford, I'm confident that this portfolio represents the best possible strategy given current market conditions and available information. I'm confident that we've structured it to be resilient during difficult periods and positioned for growth during favorable periods." Maya paused. "But I can't promise that every investment will succeed or that we won't face periods of underperformance. What I can promise is that we'll monitor every position carefully, communicate with you regularly and honestly, and make adjustments when necessary to keep the portfolio aligned with your goals." Victoria smiled, the first genuine smile Maya had seen from her that morning. "That's exactly the answer I was hoping for. Too many advisors promise guaranteed results that they can't deliver. You're promising competent management and honest communication, which are the only things you can actually control." Victoria stood up, and everyone else rose as well. "Maya, I'm authorizing the account transfer. I'd like to see the first quarterly report in January, with monthly email updates on any significant position changes or market developments that might affect the portfolio." As they shook hands, Victoria leaned closer to Maya. "How you've given me something I haven't had in years, confidence in my financial advisor. Don't lose that by trying to be perfect. Just keep being thorough, honest, and focused on my objectives." After Victoria left, the conference room erupted in congratulations. Richard looked genuinely pleased, Marcus seemed proud, and Sarah was already making notes about implementation logistics. "Maya," Richard said as they gathered their materials, "I want you to know that this was one of the most professional client presentations I've seen in 20 years of business. Victoria Ashford is not easily impressed, and you clearly exceeded her expectations." As Maya walked back to her office, she felt a profound sense of accomplishment mixed with the sobering awareness of what came next. She'd proven she could design an investment strategy and sell it to a sophisticated client. Now she had to prove she could execute it successfully over months and years of changing market conditions. She sat down at her desk and opened her laptop to begin the account transfer paperwork. Through her window, she could see the East River reflecting the afternoon sun, and for the first time in months, Maya felt genuinely optimistic about her future. Her phone buzzed with a text from her father. "How did it go, little dragon?" Maya smiled and typed back, "I think the dragon might be ready to fly again." 3 months into managing Victoria Ashford's portfolio, Maya had developed a routine that started each morning at 5:15 a.m. with global market analysis and ended each evening with detailed position reviews. The leather portfolio case that had belonged to her father now contained quarterly performance reports, market research, and handwritten notes about economic indicators that might affect Victoria's investments. The numbers on her computer screen told a story that was both encouraging and concerning. Overall portfolio performance was up 4.2% for the quarter, outpacing the S&P 500 by nearly half a percentage point. The ESG screen technology stocks had performed particularly well, and the emerging markets allocation had benefited from better-than-expected economic data from Southeast Asia. But Maya's emerging markets bet was also causing her the most anxiety. Political tensions in Eastern Europe were creating volatility across all emerging market indices, and some of Victoria's positions had experienced significant daily fluctuations. Nothing outside normal market behavior, but enough to make Maya second-guess some of her more aggressive allocations. "Knock, knock," came Marcus's voice from her doorway. He'd made a habit of checking in with Maya every few days, ostensibly to review portfolio performance, but really to provide the kind of mentorship that couldn't be scheduled in formal meetings. "Marcus, perfect timing," Maya said, gesturing to her screen. "I wanted to get your thoughts on the emerging markets situation." Marcus pulled up a chair next to her desk, studying the performance data. "Talk me through your concerns. The Eastern European situation is creating broader emerging market volatility. Our positions in Southeast Asian infrastructure companies are fundamentally sound, but they're getting caught up in the general risk-off sentiment." Maya pulled up a chart showing the correlation between European political news and Asian stock performance. "I'm wondering if we should consider reducing the allocation temporarily." Marcus nodded thoughtfully. "What does your original investment thesis say?" "That demographic trends and infrastructure spending in developing markets will drive long-term growth, regardless of short-term political volatility in other regions." "And has anything changed about those fundamental drivers?" Maya considered the question. "No. If anything, the infrastructure needs are becoming more urgent, and the demographic dividend is accelerating. So the question becomes, are you managing the portfolio based on your investment thesis, or are you managing it based on daily market movements?" It was a gentle but pointed question, and Maya recognized it as the kind of discipline check that separated successful long-term investors from reactive traders. "You're right. I'm letting short-term volatility cloud my judgment about long-term fundamentals. It's a natural reaction," Marcus said, "especially when you're managing someone else's money and feeling the weight of that responsibility. But Victoria Ashford didn't hire us to chase daily market movements. She hired us to execute a strategic plan." Maya nodded, feeling her confidence stabilize. "Though I should probably give her a heads up about the volatility in her monthly update." "Absolutely. Transparency about short-term challenges while reaffirming long-term strategy. That's exactly the kind of communication that builds client trust." After Marcus left, Maya spent the rest of the morning preparing Victoria's quarterly report. She structured it to lead with overall performance, followed by detailed analysis of each asset class, and concluding with forward-looking commentary about market conditions and potential adjustments to the portfolio strategy. The phone rang just as she was finishing the risk assessment section. "Maya Chen." "Maya, it's Victoria. I hope I'm not interrupting anything important." Maya's pulse quickened slightly. Victoria typically communicated through scheduled meetings and formal reports, so an impromptu call suggested either very good news or a significant concern. "Not at all, Ms. Ashford. I was actually just finishing your quarterly report." "Is everything all right?" "Everything's fine, but I wanted to discuss something with you before our formal review meeting next week." Victoria's tone was measured, giving no indication of her mood. "I've been following the news about emerging market volatility, and I noticed some fluctuations in my account value over the past 2 weeks." Maya had prepared for this conversation, but her mouth still felt dry. Yes, the Eastern European situation has created some short-term turbulence across emerging market indices. Our Southeast Asian positions have been affected, despite having no direct exposure to the areas of concern. How much volatility are we talking about? The emerging markets portion of your portfolio has fluctuated between -2% and +1% over the past 2 weeks. Day to day, that translates to roughly $40,000 to $50,000 in paper value changes. There was a pause that seemed to stretch longer than it probably did. Finally, Victoria spoke. "And your assessment of the situation?" Maya took a breath, deciding to lead with her conclusion rather than building up to it. "I believe the volatility is temporary and unrelated to the fundamental investment thesis for our emerging markets allocation. The infrastructure companies we've invested in continue to report strong earnings growth and have substantial order backlogs that should sustain performance regardless of broader market sentiment." "You're not recommending any position changes?" "Not at this time. However, I'm monitoring the situation daily and have established specific trigger points that would prompt a portfolio adjustment if the volatility begins to reflect actual fundamental deterioration rather than market sentiment." Another pause, then Victoria laughed, a sound that surprised Maya with its warmth. "Maya, do you know why I called you directly instead of waiting for the quarterly report?" "I'm not sure. Because in 30 years of working with financial advisors, you're the first one who's given me actual numbers when I asked about volatility. Most advisors would have said something vague like some fluctuation within normal parameters and hoped I wouldn't press for details." Maya felt relief flood through her. "I believe you have a right to know exactly what's happening with your investments, even when the news isn't entirely positive." "Especially when the news isn't entirely positive," Victoria corrected. "That's when trust matters most. I'm satisfied with your assessment and I appreciate your transparency. I'll see you next week for the formal review." After hanging up, Maya sat back in her chair, realizing that she'd just navigated her first real test as Victoria's advisor. Not the technical challenge of designing a portfolio, but the more complex challenge of maintaining client confidence during periods of uncertainty. The rest of the afternoon passed quickly as Maya finished the quarterly report and began preparing for the following week's presentation. She was so absorbed in her work that she didn't notice Richard Sterling until he knocked on her open door. "How are things going with the Ashford account?" he asked, settling into the chair across from her desk. "Overall, very well. We're outperforming benchmarks for the quarter, and Victoria seems satisfied with both the results and the communication process." Maya paused, though I did have to explain some emerging market volatility to her this afternoon. "How did that go?" "Better than I expected." She appreciated getting specific numbers rather than vague reassurances. Richard nodded approvingly. "Victoria Ashford has survived multiple market cycles and economic downturns. She understands that volatility is part of investing. What she won't tolerate is being treated like she can't handle the truth about her own money." "That's exactly the impression I got." "Good. Because I have some news that's going to test both your portfolio management skills and your client communication abilities." Richard's expression became more serious. "We've been approached by 3 other high-net-worth clients who specifically requested to work with you based on referrals from Victoria." Maya's eyes widened. 3 clients. Combined assets of approximately $75 million, all with similar profiles to Victoria. Sophisticated investors who've been disappointed by traditional wealth management approaches and are looking for more dynamic strategies. The implications hit Maya immediately. Success with Victoria had opened doors, but it had also dramatically increased the stakes. Managing one $43 million portfolio was challenging enough. Managing over $100 million across multiple clients would require a completely different level of organization and expertise. "What's the timeline?" Maya asked. 2 of them want to meet next month. The third is taking a wait-and-see approach, but indicated she'd likely move forward if the others are satisfied with our initial presentations. Maya felt the familiar mixture of excitement and anxiety that came with significant professional opportunities. "I'll need to scale up my research and analysis capabilities pretty quickly. That's already in progress. Marcus recommended that we assign you a junior analyst to help with research and portfolio monitoring. We're also upgrading your technology platform and expanding your access to institutional research services." As Richard outlined the additional resources that would be made available to her, Maya found herself thinking about her father's advice about disguised opportunities. 6 months ago, She'd been unemployed and struggling to get interviews. Now she was being positioned to manage over $100 million in client assets. "Maya," Richard said, interrupting her thoughts, "I want you to understand something important. This level of responsibility comes with significant pressure and scrutiny. Success will accelerate your career beyond anything you might have imagined. But failure, even small failures, will be magnified because of the visibility you've gained." "I understand," Maya replied, though she wondered if she truly comprehended the weight of what she was taking on. "Good, because tomorrow we start preparing for the next phase of your career at Sterling and Associates." Maya arrived at the office the next morning to find a young man in his mid-20s waiting outside her door, holding a cup of coffee and a stack of financial newspapers. He had the eager, slightly nervous energy of someone fresh out of graduate school and determined to make a good impression. "Ms. Chen, I'm David Kumar, your new research analyst. Mr. Webb asked me to start this morning." Maya shook his hand, noting his firm grip and direct eye contact. "Please call me Maya. And thank you for being here so early. I have a feeling we're going to need every minute we can get." As they settled into her office, Maya studied David's resume. MBA from Chicago, internships at 2 major investment banks, and an undergraduate degree in economics, with a focus on emerging markets. Impressive credentials, though Maya remembered being similarly credentialed and similarly eager when she'd started at Goldman Sachs. "David, I want to be transparent about what you're walking into," Maya said. "We're managing a very demanding client portfolio, and we're about to take on several more high-net-worth accounts. The work is intellectually challenging. The standards are extremely high and the pressure can be intense." David leaned forward, his expression serious. "I understand, Maya. Marcus filled me in on the general situation. I'm ready to contribute however I can." "Good. Let's start with a comprehensive review of current positions in Victoria Ashford's portfolio. I need you to prepare detailed analyses of every holding, current performance, future outlook, risks, and opportunities." Maya handed him a printed portfolio summary. "I also need you to monitor daily market movements and flag anything that might affect our positions or investment thesis." For the next 2 hours, Maya walked David through the portfolio structure, explaining the rationale behind each allocation and the specific criteria they used for position sizing and risk management. She found that explaining her decisions to someone else helped clarify her own thinking and identify potential blind spots in her analysis. "The emerging markets allocation is interesting," David observed as they reviewed the Southeast Asian infrastructure investments. "You're betting on demographic trends and infrastructure spending, but you're also exposed to currency fluctuations and political risk." "Exactly. How would you hedge those risks without giving up the upside potential?" David considered the question, pulling up currency data on his laptop. Currency hedging through forwards or options could address exchange rate risk. Political risk is harder to hedge directly, but diversification across multiple countries and sectors should limit the impact of any single event. Maya nodded approvingly. "Good thinking. I want you to research specific hedging strategies and prepare a memo on implementation options. We may need those tools as we scale up the portfolio management operation." Around mid-morning, Sarah Martinez appeared at Maya's door with a scheduling request that made her stomach tighten. "Maya, Mr. Sterling would like you to attend the partners' meeting this afternoon. It starts at 3 o'clock in the main conference room." Partners' meetings at Sterling and Associates were typically reserved for senior staff and major business decisions. Maya had never been invited to one, and she suspected this wasn't a casual inclusion. "Do you know what the agenda is?" Maya asked. Sarah's expression was diplomatically neutral. "Strategic planning for the wealth management division," which meant, Maya realized, that they were going to discuss her role in the firm's future growth plans. The thought was both thrilling and terrifying. At 2:55 p.m., Maya walked into the main conference room to find 8 of Sterling and Associates' senior partners already seated around the polished mahogany table. Richard sat at the head with Marcus to his right and the other partners arranged by seniority. Maya took the remaining seat near the foot of the table, acutely aware that she was the youngest person in the room by at least a decade. "Thank you all for being here," Richard began. "As you know, Maya's success with the Victoria Ashford account has generated significant interest from other high-net-worth prospects. We're at a decision point about how to respond to this opportunity." Patricia Williams, The firm's managing partner and a woman Maya had heard described as brilliant but demanding leaned forward. Maya, walk us through the current status of the Ashford portfolio. Maya had prepared for this moment, but speaking to the firm's senior leadership still felt different from client presentations. The portfolio is currently up 4.2% for the quarter, outperforming relevant benchmarks by approximately 40 basis points. All asset classes are performing within expected parameters, and client satisfaction appears to be high based on regular communication. "What about the emerging markets volatility we've been seeing?" asked James Rodriguez, who headed the firm's institutional clients division. "Short-term fluctuations due to geopolitical concerns, but fundamentals remain strong. We've maintained the allocation based on our long-term investment thesis, and I've kept Ms. Ashford informed about the temporary volatility." Patricia nodded. How did she respond to that communication? She appreciated the transparency and expressed confidence in our long-term strategy. Richard gestured to a presentation screen at the far end of the room. Which brings us to our strategic question. We have 3 prospective clients with combined assets of $75 million who want to work specifically with Maya. The question is whether we're prepared to support that level of growth in our wealth management division. Marcus spoke up. From a portfolio management perspective, Maya has demonstrated the technical skills and client relationship abilities to handle additional accounts. We'd need to expand her support structure, but that's a manageable challenge. What about risk management? Patricia asked. We're talking about more than doubling our wealth management assets under management in a matter of months. That's significant operational risk if anything goes wrong. Maya felt the weight of the discussion, but also recognized an opportunity to contribute. "If I may," she said, "I think the bigger risk might be not responding to this opportunity. Victoria Ashford's referrals represent validation of our approach from one of the most respected investors in the city. Turning away those clients could signal that we're not prepared for growth." Patricia's expression was unreadable. "And if market conditions turn against us, if your portfolio strategies don't perform as expected with larger amounts of capital?" It was a fair question, and Maya had been thinking about it constantly. "I believe the strategies are scalable, but you're right that larger portfolios attract more scrutiny and have less room for error. I'd recommend implementing additional risk management protocols and more frequent performance reviews as we grow." The discussion continued for another 30 minutes, covering everything from compliance requirements to technology infrastructure to marketing implications. Maya found herself contributing more than she'd expected, answering questions about client onboarding, portfolio management processes, and growth projections. Finally, Richard called for a decision. "All in favor of moving forward with the expansion plan?" Maya watched as 7 hands went up around the table. Only Patricia abstained, though she explained her position. "I'm not opposed to the plan, but I want monthly progress reviews for the first 6 months. This level of growth represents both our biggest opportunity and our biggest risk." After the meeting, Marcus walked with Maya back to her office. "How are you feeling about all this?" he asked. Maya considered the question honestly. "Excited, terrified, and determined all at the same time. That's probably the right combination of emotions," Marcus replied. "Maya, I want you to remember something as you take on these additional responsibilities. Success in this business isn't just about generating returns. It's about building trust with people who are entrusting you with their financial security. Focus on that relationship aspect, and the performance will follow." As Maya settled back at her desk, she found David waiting with a stack of research reports and a list of questions about the portfolio hedging strategies she'd asked him to investigate. The evening sun was casting long shadows across her office, and the city below was transitioning from the business day to evening routines. Maya looked out at the Manhattan skyline, thinking about how much her life had changed in just a few months. She'd gone from answering phones to managing over $40 million, and now she was about to take on responsibility for more than $100 million. The scale was daunting, but for the first time since losing her job at Goldman Sachs, she felt like she was exactly where she belonged. Her phone buzzed with a text from her father. "How was your day, little dragon?" Maya smiled and typed back, "I think the dragon is getting ready to soar." 6 months after closing Victoria Ashford's account, Maya stood in the same conference room where she'd first presented her investment recommendations, but everything else had changed. The table was now surrounded by 4 of Manhattan's most sophisticated investors, representing a combined portfolio value of over $120 million. David Kumar sat to her right with detailed research files, while Marcus and Richard flanked the other end of the table. The pressure was unlike anything Maya had experienced, even during her most challenging days at Goldman Sachs. "Ladies and gentlemen," Richard began, "thank you for joining us today. As you know, Maya Chen has been managing Victoria Ashford's portfolio with exceptional results, and we're here to discuss expanding that success to your accounts." Maya looked around the table, studying each face. Besides Victoria, there was Eleanor Hartwick, a tech entrepreneur who'd sold her company for $180 million, Dr. James Morrison, a surgeon whose medical device patents had generated substantial wealth, and Catherine Zhang, a hedge fund executive who managed institutional money but needed personal wealth management for her own assets. Each represented a different type of investor with unique goals, risk tolerances, and expectations. The complexity of managing multiple sophisticated portfolios simultaneously would require everything Maya had learned about both technical analysis and client psychology. "Maya," Eleanor said, her voice carrying the directness that had made her successful in Silicon Valley, "Victoria speaks very highly of your work, but I need to understand your investment philosophy beyond just portfolio allocation. How do you think about risk in a world where technology is disrupting every traditional industry?" Maya had prepared for this question, knowing that Eleanor's background would make her particularly focused on innovation and disruption. Risk management in today's market requires understanding the difference between volatility and true risk. Traditional industries that fail to adapt to technological change represent existential risk, while innovative companies that appear volatile might actually be less risky long-term if they're positioned correctly for future trends. "Give me a specific example," Eleanor pressed. "Automotive manufacturers, traditional car companies that are slow to adopt electric vehicle technology, face existential threats from Tesla, Chinese EV manufacturers, and changing consumer preferences. But a company like Ford, which is aggressively investing in EV infrastructure and restructuring its business model, might be less risky than it appears, despite near-term transition costs." Dr. Morrison leaned forward. "That's an interesting perspective, but how do you balance innovation investments with the need for stable income generation?" "My financial goals include funding medical research initiatives that require predictable cash flows." Maya nodded, appreciating the complexity of his question. Portfolio construction should reflect the client's complete financial ecosystem, not just growth objectives. For income-focused goals, we'd structure a ladder of dividend-paying stocks and bonds that mature at specific intervals, while maintaining growth allocations in sectors that benefit from the same trends driving your research interests: biotechnology, medical devices, healthcare technology. Catherine Zhang, who had been listening intently, spoke up. "Maya, you're talking about customized portfolios for each client rather than a standardized approach. That's much more complex and time-intensive. How do you ensure consistent quality and risk management across multiple accounts?" It was a sophisticated question from someone who understood the operational challenges of portfolio management at scale. Maya felt grateful for the months of preparation and the systematic processes she'd developed with David's help. "We've built scalable systems that allow for customization within a disciplined framework," Maya replied. "Each portfolio shares core risk management principles and monitoring protocols, but asset allocation and specific investments are tailored to individual goals. We use technology to track correlations across accounts and ensure that no single market event can disproportionately impact multiple clients." Victoria, who had been quietly observing the exchange, smiled slightly. "Maya, perhaps you could walk everyone through how you've managed my account during the recent market volatility. I think that might address some of the concerns about real-world performance." Maya pulled up a presentation that showed Victoria's portfolio performance over the past 6 months, including the challenging period when emerging markets experienced significant turbulence and technology stocks faced regulatory pressure. During the emerging markets volatility in February, Victoria's portfolio experienced temporary fluctuations of approximately 3.2%, while comparable portfolios at other firms declined by 5 to 7%, Maya explained. "The difference came from our diversification strategy and our decision to maintain positions based on long-term fundamentals rather than reacting to short-term sentiment." She clicked to the next slide, showing recent performance data. Year-to-date, the portfolio is up 11.4%, outperforming the S&P 500 by 180 basis points while maintaining lower volatility through better diversification. Dr. Morrison studied the charts. What about the technology sector concerns? How did you navigate the regulatory uncertainty? We reduced positions in companies with the highest regulatory risk, primarily large social media platforms, and increased allocations to enterprise software and cybersecurity companies that benefit from regulatory compliance requirements. The net effect was maintaining technology exposure while reducing regulatory risk. Eleanor nodded approvingly. Smart positioning. You turned regulatory headwinds into investment opportunities. For the next hour, Maya fielded questions about everything from tax optimization strategies to ESG integration to international diversification. Each client brought their own expertise and perspective. Challenging her to think beyond standard portfolio management practices, Catherine asked about currency hedging for international investments. Dr. Morrison wanted to understand how healthcare sector investments would be managed to avoid conflicts with his professional activities. Eleanor pressed for details about cryptocurrency and alternative investment allocations. Maya found herself drawing on every aspect of her training and experience, but also recognizing how much she'd grown since that first conversation with Victoria 6 months earlier. She was no longer just demonstrating technical competence, she was synthesizing complex information in real time and adapting her recommendations to address each client's specific concerns. I have one final question, Catherine said, as the presentation wound down. Maya, you've shown us impressive technical skills and strong performance results, but managing this level of assets for this type of clientele will create enormous pressure. How do you handle stress, and how do we know you won't make emotional decisions during difficult market periods? Maya paused, recognizing that Catherine was asking about character as much as competence. 6 months ago, I was unemployed and questioning whether I belonged in this industry. Taking the receptionist position at Sterling & Associates was one of the most humbling experiences of my career, but it also taught me something important about resilience and perspective. She looked around the table, making eye contact with each potential client. Market volatility is stressful, but it's temporary. Losing your job and starting over, that's a different kind of pressure that puts market fluctuations in perspective. I handle stress by focusing on what I can control: thorough research, disciplined processes, and honest communication with clients. I can't control market movements, but I can control how well prepared we are to respond to them. The room was quiet for a moment. Then Victoria spoke. That's exactly why I chose to work with Maya. Competence without character is dangerous in this business. Maya has both. After the potential clients left to consider their decisions, Maya remained in the conference room with Richard, Marcus, and David. The afternoon sun was casting long shadows across the mahogany table, and Maya felt the exhaustion that came after intense intellectual performance. How do you think it went? Richard asked. Maya considered the question honestly. I think we presented a compelling case, but they're all sophisticated enough to take time and evaluate multiple options. We'll know their decisions based on the quality of their questions and follow-up requests. Marcus nodded. The questions were very specific and detailed. That usually indicates serious interest rather than polite curiosity. David, who had been taking detailed notes throughout the meeting, looked up from his laptop. Maya, I've already received follow-up emails from Dr. Morrison and Eleanor with additional questions about portfolio construction. Should I respond directly or route them through you? Route them through me for now, Maya replied. Client communication needs to be consistent, especially during the decision-making process. As they gathered their materials, Richard paused at the door. Maya, regardless of how many of these clients decide to move forward, you should know that today's presentation was exceptional. You've demonstrated that you can operate at the highest level of this business. 3 weeks later, Maya sat in her newly expanded office, a corner space with windows facing both the East River and Central Park, reviewing the morning's market data before her 9 a.m. meeting with Victoria Ashford. The leather portfolio case that had belonged to her father now shared desk space with 2 additional briefcases, each containing detailed reports for the clients who had decided to entrust their wealth to her management. All 4 potential clients had signed on. Eleanor Hartwick had transferred $32 million, Dr. Morrison had moved $28 million, and Catherine Zhang had committed $18 million to start, with additional assets to follow based on initial performance. Combined with Victoria's original $43 million, Maya was now responsible for managing $121 million across 4 distinct portfolios. The scale was daunting, but the systematic processes she'd developed with David and Marcus were proving effective. Each client received customized investment strategies that reflected their individual goals, while maintaining overall risk management discipline across all accounts. "Maya," David called from the outer office that now served as their shared workspace, "Victoria Ashford is here for her quarterly review." Maya smiled, remembering how nervous she'd been for Victoria's first quarterly review 9 months earlier. Now these meetings felt like conversations with a trusted partner, rather than high-stakes presentations to an intimidating client. "Victoria, welcome," Maya said as her first client entered the office. "Please have a seat. I have excellent news to share." Victoria settled into the leather chair across from Maya's desk, her expression expectant. Over the past 9 months, she'd become more than just a client. She was a mentor, a champion, and someone whose opinion Maya genuinely valued. "Your portfolio performance for the quarter?" Victoria asked. "Up 6.8%, bringing your year-to-date returns to 18.2%, Maya replied, turning her laptop screen to show the detailed performance analysis. "More importantly, we've achieved those returns with lower volatility than the broader market, which means better risk-adjusted performance." Victoria studied the numbers, her financial acuity evident in the questions she asked about specific positions and sector allocations. "The technology rebalancing you did in August was particularly well-timed. Thank you. We reduced exposure to regulatory-sensitive platforms and increased positions in enterprise software and cybersecurity. The regulatory environment played out exactly as we anticipated. And the emerging markets allocation?" Maya pulled up the relevant data. "Still outperforming despite ongoing geopolitical concerns. The infrastructure companies we selected have continued to report strong earnings growth, and the currency hedging strategies David developed have protected us from exchange rate volatility." They spent the next 30 minutes reviewing each component of the portfolio, discussing market outlook, and considering potential adjustments for the coming quarter. Maya found herself grateful for Victoria's engagement and insight. She asked the kinds of questions that made Maya think more deeply about her investment decisions. "Maya," Victoria said as they concluded the formal review, "I want to discuss something else with you." "Of course." Victoria's expression became more serious. "I've been approached by the board of the Hamilton Foundation. It's a $400 million endowment fund focused on education and healthcare initiatives. They're looking for new investment management, and several board members have asked about your work." Maya felt her pulse quicken. Managing a $400 million institutional portfolio would represent a completely different level of responsibility and visibility. "That's significant." "It would be. Endowment management requires longer time horizons and different risk considerations than individual wealth management, but the fundamental principles are similar." Victoria paused. "The question is whether you're interested, and whether Sterling and Associates would support that kind of expansion." Maya looked out her office window at the Manhattan skyline, thinking about how far she'd come since that rainy November morning when she'd first walked into Sterling and Associates as a receptionist. The prospect of managing institutional money was both thrilling and daunting. "I'm definitely interested," Maya said finally, "but I'd need to discuss it with Richard and make sure we have the infrastructure to support that level of responsibility." Victoria nodded. "I told them you'd need time to consider. The board meets next month and they'd like to interview potential managers then." After Victoria left, Maya sat alone in her office, processing the magnitude of what had just been offered. A year ago, she'd been struggling to get interviews for junior analyst positions. Now she was being considered for one of the most prestigious institutional mandates in the city. Her phone rang, interrupting her thoughts. "Maya Chen, Little Dragon, how was your meeting with Victoria?" Maya smiled at her father's voice. "Bah, I have some news that I think will surprise you." She spent the next 20 minutes telling him about the portfolio performance, the success with her new clients, and Victoria's latest opportunity. Her father listened without interruption, asking thoughtful questions about the challenges and opportunities ahead. "I'm proud of you," he said when she finished, "but more than that, I'm proud of how you've handled both success and failure. Success didn't make you arrogant, and failure didn't break your spirit. I learned that from you, Maya replied. No, little dragon, you learned that from yourself. I just reminded you that you were strong enough to handle whatever came next. After hanging up, Maya walked down the hall to Richard Sterling's office. His assistant waved her in, and she found him reviewing quarterly reports at his desk. Maya, perfect timing. I was just reviewing the performance numbers for your client portfolios. Exceptional work across the board. Thank you. Richard, I need to discuss something with you. She outlined Victoria's conversation about the Hamilton Foundation opportunity, watching Richard's expression shift from interest to excitement as he understood the implications. $400 million, he said slowly. That would make Sterling & Associates one of the largest independent wealth management firms in the city. It would also require significant infrastructure investment and regulatory compliance expansion, Maya pointed out. We'd essentially be adding an institutional division to what's been primarily a high-net-worth individual practice. Richard was quiet for several minutes, and Maya could almost see him calculating risks, opportunities, and resource requirements. Finally, he looked up at her. Maya, 18 months ago, you walked into this building looking for any job that would pay the bills. You've just described an opportunity that could transform this entire firm. He paused. The question is, are you ready for that level of responsibility? Maya thought about the question seriously. Managing institutional money would mean board presentations, regulatory scrutiny, public accountability, and performance pressure, unlike anything she'd experienced. It would also mean the opportunity to impact educational and healthcare initiatives that could affect thousands of lives. I think I am, she said finally. But I'd want Marcus involved as a senior advisor, and I'd need to expand my team significantly. Done. Whatever resources you need. As Maya walked back to her office, she passed the reception desk where she'd started her journey at Sterling & Associates. The young woman currently manning the phones looked up and smiled, reminding Maya of her own nervousness during those first days. Maya paused, thinking about the circuitous path that had led her from unemployment to managing over $100 million in client assets to potentially overseeing a $400 million endowment. None of it had gone according to plan, but all of it had led to exactly where she needed to be. David looked up as she entered their shared workspace. How did the Victoria meeting go? Very well, but David, I think we're about to get much busier. As Maya settled back at her desk to begin preparing for the Hamilton Foundation opportunity, she thought about her father's words about disguised opportunities and taking steps backward to move forward. Sometimes, she realized, the biggest opportunities came not from seeking them out, but from doing excellent work wherever you found yourself and being ready when possibilities presented themselves. Her phone buzzed with a text from Victoria. Maya, the Hamilton board is very impressed by your background and references. The interview is scheduled for the 15th. Congratulations on building something remarkable from a difficult beginning. Maya smiled and typed back, Thank you for believing in me when I was just the receptionist. Sometimes that's exactly what someone needs to become who they're meant to be. Outside her window, the Manhattan skyline stretched toward the horizon, full of possibilities and challenges that she was finally ready to embrace. The little dragon, as her father called her, had indeed learned to soar.